All right, good morning, everybody. Happy Monday. It's November 21st, about 8:15 a.m. my time. So I wanted to go over markets real quick before the US session starts. I won't take too much of your time, probably no more than 10, 15 minutes. So first, what I want to start off with is just, a quick look at the S&P 500. As we spoke about last time, right? If you start looking at the 40 weekly MA, okay, this has been kind of the cap that we've had pretty much the entire year. That's really created local, bear market cycle tops where we start to roll over again. And again, we hit that 40 weekly MA, we roll over again, and now we're hitting it again. Additionally, there's another way to look at the market where you could say, every time the market has had a local cycle low. So let's just say, from this high to this low right here, right? You can see price comes pretty close to that, 618, 70% marker of a retrace back to the upside and then rolls over again, right? That's one. Let's do another one right there to there. Okay, so this one barely comes back to the 50% marker. Let me see if we can do something like this one down to this one. Okay, that one is a perfect 618% tag. Okay, and then let's do this one to this one. Where is that? That's a perfect 618% tag, right? So point is that we've had at least three legs in the market from here down like that, from here down like that, and then from here down like that. Three different separate legs in the market that have come back to the 618% retracement. And we've had, again, a subsequent sell-off. Now, why is that important? Well, let's start connecting that with where we are in crypto, right? Well, first of all, we know for the most part that crypto has been definitely getting beat up pretty hard, irrespective of what's happening in the equity markets over the past week or two, simply because of the contagion effects of what happened in FTX and the things that are happening thereafter. So from a simple market cap perspective, right, here's kind of how we can look at it. We're barely hanging on to the $750 billion level right here. And below that, to me, all this is void until we hit probably somewhere around $500 billion. And I pointed this out last time too, right? I mentioned that up until the point of, maybe recognizing like this little area around 500 billion, other than that, if you're looking for just pure, SR retests of some sort from a market cap perspective, that's way the heck down here around, 350 to $430 billion or so. Okay. That would mean that obviously the crypto market as a total market cap goes down another, how much is that? Like 40% ish, almost 45-ish percent, right? 40, 44%. Okay. Now let's connect that with BTC and, historic cycles, right? Well, we know for the most part that BTC has had numerous, I guess not numerous, but only two big, deep cycles of drawdown that have led to about 84% sell-off right there, about 87% sell-off. Okay. And then I don't know how much this one was. I don't even know if you want to count this as a cycle sell-off, but that one was about a 76% sell-off. Given that this cycle right here was sort of very unknown of, how crypto was doing back in the day, and crypto started to gain attention and notoriety way back here in, 2014 all the way up to 16. And then of course, 2017, 2018, crypto became, and Bitcoin became a mainstream talking point. I would say this cycle right now is much more similar to 2017 and 18 or 2014, 15, 16, right? And in fact, if you kind of look at the market from this perspective where you had a high and then a low, like pronounced low, that took about, I think, 413 days or so for that market low to come in. And then in the 2017 cycle, okay, that low took about 365 days to come in, so close to an entire year. And now, depending on how you want to measure the high, okay, where's the high? Let's just say it's this one or this one. Let's just assume it's this one, because we know that this local top right here, double top looking thing, was kind of created by, more borrowing, more leverage by actors like Three Arrows Capital or Alameda, many of these big funds that really just, stepped up the gas pedal on leverage. So let's assume this is the high of the crypto market and BTC. Well, where are we now? We're already 588 days in, much more pronounced than the previous 2017-18 bear market, as well as the 2014 and 16 bear market. But now, guess what? We're only about 75% down. If we were to take that similar 80 to 84% down, that puts us somewhere around $11,000 for BTC. Okay, that means we have another maybe 30-ish% to go from the current prices to the downside. Okay, so just something to pay attention to. All right, and then of course, we know that if you start looking at, say, I don't know, Total 2, right, which is just the altcoin market cap. Okay, Total 2 also looks pretty darn beat up, right? And guess what? It's literally sitting right on top of the 2017 and 18 high. Okay, so from here, in my opinion, the downside again is very similar to what I just showed you earlier for BTC, which is we may have a pretty decent, 30, 40% drop for the Total 2 market cap, meaning altcoins. Now let's finally wrap it up with DeFi. DeFi USDT. Do they have a perp? Let me see. That one doesn't look good. I wanted a more historical one, but I mean, anyway, if this is, if this is a representation of DeFi products, so I posted here in the altcoin chat area of, here's some of the DeFi products and their daily token trading value, right? Volume, sorry. And it's things like Uniswap and 0x, 1inch, Balancer, Synthetics, Aave, Bancor, etc. Right? Of course, that you can classify like things like Sushi in there. You could classify, many different altcoins. But the fact of the matter is, a lot of their volumes have been trending down pretty much for an entire year, if not more. Like pretty much since last, May or June, when the market really peaked. Okay, so point is, the current conditions of the market are very brittle, and they're susceptible to more bad news or any sort of wind that comes that could be bad news or contagion effects that could tip it over. And so here's sort of the contagion effects of what I see happening right now. I don't know why there's balloons right now, but anyway, first is GBTC, and of course, the grayscale associated trust, right, that holds that GBTC product, which is owned by DCG, Digital Currency Group, which is one of the big funds in the space. Point is that GBTC is a product that, in my opinion, is not one that people really want to touch or want to bid. It is now at a 45% discount compared to its asset holdings of BTC. Meaning they're saying, hey, we'll give you a 45% discount for the amount of BTC we hold, and yet people still do not want to buy it. And that discount has been widening pretty much for almost a year and a half. Okay, at least a year, because from January earlier this year till now, it's a 45% discount, and before that, it was already a 5 to 7% discount. Okay, now that's one catalyst, right? Here's this account talking about different bear catalysts. And again, I know it may be tough to listen to all this sort of, bear porn, if you will, and things are already bleak in the market. And I know it's tough to kind of listen to more and more negative things about crypto. But the fact of the matter is, this is the kind of cycle that we're in, and we just got to be careful, right? So here's all the things that you need to be watching for potential issues that may happen. Now, I think some of these we could probably ignore. Again, personally, I would ignore. DeFi getting banned in the US, I think I would ignore. ETH declared as a security, I don't need to worry about that right now. Infinite mine bug exploited in Bitcoin, like I'm not worried about that. Satoshi wallet starting to sell BTC, not worried about that. But Genesis declaring bankruptcy, now that's a real problem. Grayscale, GBTC, and ETH forced to dissolve, that to me is a real problem, right? You can kind of see that there are, multiple signs showing pressure on the market. So for example, Charles here talking about, Bitcoin miner bloodbath, meaning miners who did not sell, they're now beginning to almost capitulate because they didn't sell properly to cover their costs, for their mining costs or mining equipment. And now they're facing the pressure as the market goes down. So it's almost like shooting yourself in the foot, because as you're selling your mined Bitcoins to cover your costs, the price of Bitcoin is also going down, right? So unless you're a miner who's willing to start, selling actively right away before other miners, more and more miners might pile in, and they may, further sort of create a cascade in Bitcoin prices. Okay, so that's one of the larger concerns, right? Again, DCG as a fund, if they are really screwed, that could be a huge issue for the market. And then there's Jump Capital, who is another bigger entity. People have been tracking their wallets, and they're saying that, hey, it looks like Jump Capital might be moving money around, or they might be selling. Again, there's no validation to all this. But again, point is that these are concerns that are arising, and we need to be careful. Here's the DCG portfolio performance so far. Again, they're down, quite a bit on some of their positions. So one of the many reasons to be concerned. Okay. So point is that there are many reasons to worry about DCG. There are many reasons to worry about the market, given its, current positioning, given its current fears, right? And on top of that, we add to the fact that all the FTX related issues, from last week have slowly been surfacing of who are the dead bodies to surface, who is another fund, another project, another treasury, who is caught and trapped and lost a bunch of money, right? These are all things that are concerning to the market, okay? So what I'll be watching, in this coming week is, does BTC actually start breaking down, okay? Because so far, if you kind of look at this area right here, I'd mapped this out, not too long ago, and I stated that, hey, if we look at this descending little channel right here, right, and I stretch this out a little bit further, if we start bouncing at the lower end of this trend line support, we can bounce right here somewhere around $14,000 should we drop in the coming week or two. Okay, $14,000. If we're to hit the bottom of this channel, which is also kind of a unique area where price is held, well, if we drop in the next week or two, that could be somewhere around $11,000 or $12,000. So those are the two areas to be watching. Now, of course, we could easily wick much lower like we did here in 2020, and that wick gets absorbed, meaning if we drop, we could wick all the way down to like 10,000 or 9,000, but we may close higher. We may close around 12. We may close around 14 for all I know. So I want you guys to be aware that when markets get dislocated, you may have some excessive selling that occurs, but doesn't necessarily mean that selling is, is contagious or toxic at the end. It could just be, the liquidation engines that are cleaning up the mess away at the very lows, and the market will close higher. Okay. And the reason I'm telling you that is because when you see big sharp selling at the end like this, right, where it's like complete panic, that might be the time to step in. Now, personally, I don't really know if this is a time to step in. I'll be completely honest. Right now, all I'm doing is I'm just trading the market on a day-to-day perspective, or more so on an hour-to-hour perspective. If I see scalps on a long or short side, I'll take them. That's all I'm really doing. Other than that, I don't see the market worth, trading from a swing perspective. I don't see the reason why I should get into a position in the market where I need to start putting my money at risk because I think the market is bottoming. Okay. If you think the market is bottoming, right? Like we talked about earlier, if your time horizon is, multiple years out, this might be a pretty good time to start dollar cost averaging, right? Again, not financial advice, but that's something you can consider. But remember that if you're looking at, DeFi tokens, or you're looking at other altcoins, some of these altcoins are aggressively beat up. Like ETH, for example, currently sitting under its VWAP monthly, quarterly, and weekly, right? It can easily head down, further. If we're looking at this ascending trend line, similar to what I just showed you on BTC, this trend line right here, BTC is much closer to its long-term trend line versus ETH. I think it would take almost a panic of some sort to make ETH drop towards this trend line. Like that would be a, 50 to 70% drop should ETH, come anywhere close to this trend line. Do I think it's possible? Yeah, but I think the chances are low, right? Like if ETH were to drop somewhere close to this trend line in the next week or two, or the next, few weeks, that would mean like a 50 to 70% drop in ETH prices. What would cause something like that? I don't know, some mass panic. It could literally be Grayscale blowing up. It could be some sort of regulation coming out. It could be any number of things that we can't really foresee right now. But, what we do already know that are concerns on the horizon are, this whole DCG issue that we spoke about, the FTX related hacker, the FTX contagion effects, maybe Jump Capital is in a little bit of trouble, right? And then, of course, miners selling, and that causes sort of a effect in the rest of the market. So there's many reasons to worry about, and you don't need to start inventing crazy theories of why the market could go down. There are clear reasons already evident why the market could go down. Okay, but I will say that this time around, in a cycle perspective, I believe that there are better products out in crypto than there were in 2018 and 19 bear market, because back then we knew like 90% of the shit was vaporware, like it had no use. This time around, I actually think that there's a lot of merit to some of these projects, but I do think there's a lot of overlap, right? There's an overlap between, say L1 or L2 ecosystems. You can't have Solana and Matic and, Near Protocol and AVAX and Phantom and Ethereum and One Harmony and Atom and Polkadot all doing the same things, which is, creating a sort of ecosystem of DeFi related products, of NFT platforms and whatnot, right? You only need like maybe 1, 2 at most. And that creates the larger value capture of where money could be concentrated. Where do we think that will be, next, or which products could it be? I don't know, right? I don't know where money's going to concentrate in the next 2 or 3 years, but I do know that Ethereum has that staying power because it's already proven itself. And Ethereum already has a big team, big backers, brand recognition. So I think Ethereum is definitely one. Who's the next one? I don't know. Could be Matic, could be Solana, or could be Atom. Those are the only ones that are on my list. I don't care about Ren. I don't really care about Rune, Near, AVAX, One Harmony, Phantom, or Polkadot, because these have not shown me, even in the height of their bull cycle, that they can generate enough user activity, total value locked, continuous growth, as compared to things like Ethereum or Cosmos or Solana, okay, or even Matic. These 4 products like Ethereum and Atom, Matic, and Solana, I think so far are proving their resilience in some way. Obviously, Solana has been beat up because of the whole FTX issue, and their user activity and stuff has gone down, but their NFT related protocol, NFT users and activity has actually been decent, and so that's one of the reasons why I want to be watching Solana. Other than that, and then of course, DEXs, right? Like you want to be watching DEXs for the future because DEXs do have a future, especially given the centralized exchange issues that we just saw, over the last couple of weeks regarding FTX, right? So DEXs may have a bright future ahead of them. GMX is one, Uniswap is another that you want to be watching. DYDX is another that you could be watching. So there's many of these protocols that could be, some bright spots in the future for their existence of how they can pull volume and users and activity away from centralized exchanges. Now, I will say that I'm not in the camp of believing that centralized exchanges will just disappear. I actually think that centralized exchanges will still be just as big of a play as they were, this cycle or the cycle in 2018 and 19, simply because people are used to, using brokerages. They're used to centralized points of liquidity. They're used to the UI UX of what centralized exchanges can offer. And so until, DEXs and these different exchanges can give us that kind of UI, and that kind of like ease of use and liquidity and volume, I think centralized exchanges are still going to be a big thing. Who cares what happened with FTX? That was just like a rogue actor. But, there's going to be great centralized exchanges like Binance who are going to continue to thrive. I think Bybit or KuCoin or, BitGet or Femex, all of these exchanges, I think, are going to be alive. Okay. Some might perish away simply because they don't have enough users or activity, kind of like, Bitstamp did because of the lack of their spot volume. But at least like they won't have significant issues like FTX. Okay. So anyway, I just want to talk about these things just to give y'all a lay of the land of where we are. From a scalping perspective, I think today I'll be watching for the market to give me, maybe pull back and scalp opportunities on BTC. I think BTC probably is still a better short than a long, but not yet. Like I want to start seeing how equity markets, do today. Again, it is a short week. So we have, Thanksgiving week here in the United States. So I don't expect, I do expect volatility, but I don't expect like massive drops like this one or this kind of continuous drop. I think we're going to be chopping about a little bit right here. And that may mean that crypto itself doesn't really get, wind in its sails from the back of equities. It's not like it has anyway, because crypto has been struggling for the most part for, its own internal reasons. While equities were going up, you can kind of see that BTC and most of crypto really didn't get that kind of bid, as equities were going up. So crypto has its own struggles that it has to deal with. We'll see, what happens in the coming few weeks. But again, don't get too bogged down with all this, bear porn, bear catalyst stuff. It is important to pay attention to, and it's definitely important not to ignore, but it doesn't mean that you just have to be completely and aggressively bearish about all things crypto. It just means that that's the kind of cycle that we're in now. And sooner or later, I think there'll be sort of a basing period. It'll be sort of a capitulation that may happen. And then after that, people go back to building. People go back to, trying to figure out where the market will, find good products and money to get parked in. What could be the future of crypto? New narratives developing, new theses developing. And that's what I'm looking forward to. Okay. And I hope you are too. Anyway, that's all I have, everybody. Hope y'all enjoy this video. If y'all do like it, hit the thumbs up. But yeah, take care, everybody. Cheers.